Good evening, class, and welcome to our advanced taxation class for today. Our topic for today is taxation of the digital economy. Today, we live in a digital economy and we see a lot of things being digitalized. We see the evolving of e-commerce. We see how e-commerce have taken the world by storm, how tax practices and administration are being digitalized, and how these new technologies have an impact in tax administration, and what are the IT tools that is effective for tax audit and reporting. We're going to be seeing some of these things being discussed here. Now, let's go straight to this topic. This is not going to be a very long topic. Now, for a good number of years, accountants have been engaged in either tax practice or tax administration with so many challenges coming from the application of information technology to tax issues. Then the challenges are becoming numerous as disruptive technologies are being churned out every day. Innovative disruptions are coming into the market and are changing the face of or the landscape of taxation. And so the problems are getting higher. Professional firms that are used to paper and book form of delivering value to their clients were facing more pressures when they have to deal with the COVID-19 pandemic. And so they had to learn how to embrace digital tools that will make them, serve their clients virtually without much contact with them. And other tax administrators, such as the federal, state, and local governments, are playing catch up now in technology adoption as these revenues are still carrying some of their work manually. And so we are going to be looking at the dynamic environment of taxation or tax practice occasioned by the digital economy. Now, what is digital economy? Digital economy refers to economy that is based on digital technology. It is sometimes called the internet economy, the web economy. Now, in the 70s, 80s, even 90s, people go to school, go to the four walls of school, they learn with their book, biro, or pen and paper. But today, you can sit in your house without entering the physical four walls of the school, and you learn. Children today learn from the use of phones. They have online classes. Who has ever thought of online classes before? We have online meetings and all what you have. And so this is digital economy coming to take center stage in our affairs. Now, there is a general consensus that the current global and national legal tax framework were not designed for taxing the digital economy. And because when these taxes were designed without the forethought of the digital economy, it presents a major challenge in applying the principles of general tax to taxing the digital economy. And so digital transactions coming from e-commerce, they generate significant revenue for companies and individuals that operate in that space. And that's huge inflows of funds to this company and outflows from them have escaped taxes because of the issues of taxing the digital economy. Now, one primary reason for some of these problems is because a number of service providers within the digital space are not captured within the tax nets. Why? Because for one reason, they don't have a physical identifiable presence in this jurisdiction where these economic activities take place. And so you have not caught them in your tax net, but they are having significant presence economically because people in our jurisdiction, let's say Nigeria, are trading with them. Now, the challenges include most economic across the globe are undergoing digital transformation, which has brought about digitalization of transactions through e-commerce. These transactions are growing at exponential rates, much higher than the normal transactions. Today, if you want to buy a recharge card, most people will not go to a store where they sell recharge card. They want to scratch it, and load. We mostly buy from our digital platforms. We want to shop, you buy digitally. So you see these digital transformation transactions are growing at an exponential rate, and this happens all around the globe. Tax authorities, especially those in Africa and other developing countries, are still challenged with revenue collections and audits of the digitalized economy. And some big digital players have failed to consider the jurisdiction where the services are consumed when paying or remitting tax. So these are some of the challenges that arises from these digital economies. What is the mechanism of the e-commerce? Now, when businesses are happening in the internet, they are referred to as e-commerce transaction, which involves online buying and selling of goods and services. Now, I'll be using example of Jumia or perhaps Temu, but let me stick with Jumia. I am not advertising for them. I am just using them to illustrate the point. So you want to buy something you see on Jumia, you would have gone to their site, specifically look for the item, or you may have seen it pop up from an advert and you are directed to the site where you click. And now you saw what you like, you clicked and it's entered your cart. So when you place the order, it's been added to the cart. After finishing shopping and you want to check out, you go to the payment side, either pay on cash on delivery when it is being delivered to you, or you wait, you either pay cash upfront immediately or you pay cash on delivery. Now, these goods get verified. How? Sometimes you place this order and you get a call that confirms if you actually place this order, then the order is logged. When the order is logged, you get a notification that the order is logged because it is available. If it is not available, they will tell you the estimated time that this order will be available. Now, the product is being arranged. The product is being brought sourced from wherever it is, maybe imported, maybe shipped in, and it is ready for delivery. When it is delivered to the customer will now make verification. When it is verified that this is what he has ordered, you now pay. Sometimes this online shopping will want you to pay before you open the seal, open it after paying, and you find out that, wow, this is what you have ordered, what you have received, and it tallies with what you have ordered, and you enjoy it. But if you are so unfortunate that what you ordered versus what you received are not aligning, then you have paid already. Then you have to start processing your return and refund process, or maybe replacement process. And after that, the um, the transaction has ended. And you may now have to fill some feedback forms to show whether you are pleased with the service or not. So that's just a typical um, analysis of how this platform works. Now, this process accepts customers' order. The software that runs this process is called a shopping cart. So that's the shopping cart you see there in the internet. It's a process running it. In addition to making note of what is being purchased and updating the order database, the shopping cart performs other tasks such as computing taxes and levies. So you notice when you are paying for Zoom, it automatically calculates your tax. It processes coupons and discounts. You are giving these discount coupons, put it, calculates it, and deducts it from the total value. It captures the billing and delivery address of the customer. So sometimes you see the billing address being stamped on your item. This shopping cart has captured it because you've provided it. Enter user acceptance terms of reference and other terms or condition of sales, such as cash on delivery or instant payment or what have you, or that this is the acceptable time that the item could stay with you before they are returned. Other acceptable terms of service are captured in this shopping cart. Then codes such as invoice numbers, order numbers, tracking numbers are generated, especially tracking number so that you can track your order and know where it is. Forwarding customers to the payment gateway. That's the most important so that you can make the payment. Now, the payment gateway is another thing we need to know because you are following the money. In most cases, an e-commerce transaction quickly involves transacting money. Now, there is a payment gateway. It's a software that, enables you to make payments. It presents customer with payment options to accept identification details such as credit card, authenticate customer using a password, CVV code when you're using your card, multiple factors, or it can even ask you to make a transfer. And when that transfer is done, you come back and click that you have sent the money. Now, why is e-commerce the future? E-commerce is the future of our business because one, it enables 24/7 buying and selling. Have you ever wanted to go to a shop and when you reach there, the shop has closed, or they are saying that it's public holiday, they don't open, or it's a weekend, it's a Sunday, they can't open? But you sit down in the confines of your home and you click, you are buying goods, not only in the local market, even in the international field. While your local place might be sleeping right now, another place might be opening shop. And so 24 hours buying and selling are guaranteed. There is no geographical boundaries. You can stay in Nigeria and buy an antivirus from the United States. It operates at a low cost. Its operational cost is low. For example, you don't have to go spend transport to go to a far place, spend and burn your fuel to buy some physical items and ship it by yourself and pay high costs. You also sit down in the confines of your home, and you do that with a click of the button. And if you want to set it up, it is just low operation cost. You don't need to open a shop to set some of these e-commerce. Streamline transaction processes guarantees speed. It's easy to start and manage the business. Now, let's look at the technological impact of this e-commerce or this digital economy on tax practice and administrations. Now, tax practitioners, they are independent firms licensed to provide tax-related services to their clients. These are tax practitioners. Whereas the tax administration are revenue agencies with mandates to assess and collect and account for taxes on behalf of the government. Now, what are the current role of these tax practicing firms? Some of them are audit firms, tax firms. What do they do? One, they prepare tax record. So because they are audit firm, they prepare your tax record because your firm will be audited or will be charged for tax. They compute the end of year tax liability. So not only do they prepare tax record, they prepare your end of year tax liabilities. They now help to file the tax returns. Now they file it using online channels such as ATAX platform for Lagos State Tax or the Tax Pro Max for FIRS. Then they advise clients on tax matters. This advice could be when to file their taxes, when to take advantage of pioneer status, rollover relief, and other things that could help them to, save and reduce their taxes legally. They also comply with tax regulations. They file their tax assets when due, avoiding penalties. They also file it appropriately. They resolve tax disputes. When queries are raised, they help to clear the queries, they help to answer those queries, and tax disputes may be in the form of going to the tax appeal tribunal. They represent and they help these disputes go away, they manage it. Then the management of tax audit and investigation. When a tax audit is being done, they are also helping out. So these are some of the current rules of the tax practicing firm. So technology advancements can make these tax that is being performed in the tax practicing firm to become more efficient through automation. Automation has to do with, repeated processes being done automatically and in an efficient manner. Now, elements of tax practice. There are 4 elements of tax practice highlighted below. Now, we've learned some of these things when we did tax practice management. Now, this includes tax compliance. What is tax compliance? This involves gathering of relevant tax information, evaluating and classifying the information, filing of necessary tax returns, representing clients for audits, investigation. All these are involved in tax compliance. Then we have tax planning and advisory. This involves arranging tax transactions of your client to maximize advantages or minimize your tax liabilities, which is called tax evasion. at tax avoidance. Some of the tax avoidance we learned before might be so, blurred that you may not know the difference between tax evasion and tax avoidance. So, because they are so aggressively pursued. But tax planning helps you to take advantage of the loophole of the law to minimize your tax liability. Tax planning also um, involve planning and the timing of amount of pending future transactions to reduce any associated tax implication and present classify to reduce their exposure. That's involved in tax planning and advisory. Then we have the tax litigation, which involves settling dispute with tax authority in a law court or tribunal. It also involves reading, understanding, and citing a lot of the provision of the extant laws and regulations, appearing as expert or technical witness in a law court on behalf of clients, appealing on behalf of clients when necessary. Then, of course, there's a tax research and intelligence, which involves identifying a tax problem, gathering relevant evidence for tax purposes, evaluating several scenarios relating to the challenge, and then determining and outlining the solutions to the problems. Now, we've been talking about the current roles of tax practitioners. Call them the audit firm, the tax firm. Now let's go to the tax administrators. What are their current roles? These include registration and education of taxpayers. They know their civic rights when it comes to taxes. They know what to pay, where to pay, how to pay, what channel to use, and all that. Then they also have the role of receiving tax returns filed by the taxpayer. They have to receive it either electronically or through the banks. They also assess taxpayers. So when you pay your tax, file your tax, they will look at what you filed and they will check if this is okay, if this can fly. They are assessing you based on your self-assessment that you submitted. Sometimes you are not submitting your taxes and they give you a best of judgment assessment. So it's inclusive in the assessment of taxpayers. They collect these taxes, they maintain record and account for the taxes paid. Then they manage and process tax refunds. So when you have your tax refund and you apply for refund, they process it. They conduct tax audits and investigation. They manage and enforce tax recovery debt, tax debt recovery. So when you are not paying your VAT, you're not paying your CIT, you're not paying your withholding tax, you are owing the government. So they want to enforce this tax debt recovery and advise on the review of tax legislations and regulation. Now we'll see some of the rules. So what are the effects of this e-commerce, this modern disruptive technology on tax administration? Now let's look at this. In 2006, the FIRS deployed their first tax portal, which was implemented to automate and streamline taxpayers' registration and other processes. It was called Web Portal. That was in 2006. Then in 2014, under the regime of Babatunde Fowler, the ATAX, Integrated Tax Administration System, came through and it was deployed and it was used. Then recently, under the Mohamed Nami administration, the FIRS announced the adoption and deployment of what is now known as Tax Pro Max. This is a web-based application that manages tax. It handles the aspect of tax administration, which includes e-registration. You have to register through online means, through the internet, and you get your unique TIN, tax identification number, which is what is used to identify a company for tax purpose. Then there is e-assessment. So instead of filing your tax manually, go to each tax office you want to file for your client, you now file online, electronically, and their tax liabilities are computed. Assessment, notice of assessment is generated automatically and sent to the emails. Tax Pro Max does that. Then there's e-payment. Gone are the days where you now go to the bank, you pick a teller, a queue, stand in the queue to wait for like 1 hour or two, when you can do that at the confines of your home. Especially if you are trying to pay for VAT and you are doing it on the very day that the tax is due. You will find that the paying at the tip of your fingers just while you're at home is so sweet. Then there's e-filing. So there's a difference between filing and making payments. You know, when you are doing it manually, you have to file and pay it together. But now you can file, then the portal will be telling you filing done, payment pending. E-filing, then we have e-tax calculator, where you can calculate your taxes. Even though you're not paying at the moment, you can calculate your taxes. Then there is the ETCC. So because we have tax credit certificates that people will want to use for their various activities, the tax programs can handle ETCC. Then there's e-reporting and e-tax audit. All of these are made possible by the digital economy. Now, new technologies for tax practice and administration. Now, two different future tax trends, both rest on information technology. One of them is increasing use of digital technology. Tax professionals will use increasingly sophisticated technology to enhance their traditional ways of serving clients. So technology will make this, tax professionals to be serving their clients globally. Imagine having clients in different parts of the countries and you have not even visited that country for 1 year, 2 years, but you are servicing them. Or even in the 36 states of Nigeria, you have clients, different parts of the country, and you are saving transport. You don't go visiting them for you to serve them. Digital technology is helping tax professionals to do that. Then there is a radical shift into the information technology. Information technology does not simply streamline and optimize the traditional approach. It actively displaces the work of traditional tax professionals. Let's look, for example, you are an accountant that relies on your books. You create the accounts every time you are doing a transaction. But now, you decide to use Excel. Each time you want to create an Excel sheet for your transaction, you are still have improved. But imagine somebody is using QuickBooks, using Sage, or even using sophisticated software such as Microsoft Dynamics. So you can see that these are technology that are optimizing some of the work that traditional accountants do. And when an accountant is not embracing technology, he will soon be displaced because these new technologies are disrupting the environment. Then there's cloud computing. Some of the new technologies we are seeing here, cloud computing. Many of the accounting softwares are hosted in the cloud. We have the likes of QuickBooks, Sage, even Dynamics 365 from Microsoft. They are hosted in the cloud. And so you have to buy licenses to access them. Gone are the days where some people will have to you now have to get your physical license to put in one system. If that system crashes, you have to now install it on another system, one license, you will now be forced to use one computer. But no, because of cloud computing, you can even use your phone. All you need to do is just log in with your username and password anywhere in the world you're working real time. And this cloud computing system is used to automate tax computation, used to file and prepare and file taxes, used for tax planning, tax forecasting, tax payment. So these cloud-based technologies are taking the world to a new heights. And so it replaces the need for you to invest in physical on-site servers, where you will now have a server. You will now make sure that the server is working, it is cool, you are now getting your own dedicated server, which will take you very high amount of money to maintain. Instead, you invest in cloud serving, cloud servers. In fact, you're not even investing in it, you are renting because the people who are providing the service are the ones managing it. Then we have the artificial intelligence and robotics. Traditionally, tax practitioners put lots of effort in collating, analyzing financial data. But now artificial intelligence and robots can make it easy for tax practitioners to simplify and accelerate data-related taxes. Now, imagine, let me give an example of some of this intelligence, artificial intelligence. Imagine that you have people asking you a particular question every time they call. There's a particular line of questions people usually ask you, and you are spending time explaining and explaining and explaining, answering the same thing over and over again. Do you know artificial intelligence can take that part of the routine from you, so that as soon as they are online, instead of getting to speak with the customer agents directly, they're speaking to an artificial intelligence at first, or maybe before they get to reach you, artificial intelligence will have been chatting with them. How can I help you? What do you want? Describe your problem. It puts them in several categories. You choose one, it brings out other categories, you choose, and they are streamlining your search such that will provide a tailor-made answer for you. That is artificial intelligence working, and the human part is left to do a higher level thinking. So this artificial intelligence has demonstrated itself to handle routine and monotonous job, and they can do that in a large capacity, much more than a human could do. You know, sometimes when you are doing monotonous job, you could get so bored and tired and even feeling sleepy that you could make mistakes. But machine will not feel sleepy. Machine will not make mistakes like that. Machine will be highly efficient, highly effective. Then machine helps reduce costs by streamlining operations. We see something called the optical character recognition technology, which enables practicing firms to automate and accelerate manual entries by converting textual data to digital file using scanner and mobile phone. Imagine you have things that you want to, um, use, and you have OCR that you can use your phone to just scan it, and it's converted to digital file. Imagine you want to authenticate certificates of a particular company. All you just need to do is just to use your camera, your OCR code, and you scan, and minutes or even seconds, the certificate gets authenticated. Then we have the blockchain technology. Blockchain has become popular globally through the advancement in the digital currency transactions, such as Bitcoin. Now, many businesses are leveraging on the blockchain technology to record their financial and non-financial transaction in an open, secured, and decentralized ledger, where the tax consultant or the tax authorities are made part of the transaction flow and given access to data chain. It makes possible for all the parties to see each transaction and determine the tax implication. Blockchain can also be used to facilitate tax payments to the government at highly reduced processing costs. Blockchain enables smart contracts, protecting and transferring ownership of assets, verifying people's identity and credentials. Once blockchain is widely accepted and challenges around industry regulation are overcome, it will benefit businesses by reducing costs, increasing traceability, and enhancing security. So for the security and the efficiency, effectiveness, people are embracing the blockchain. Then we have the data analytics technology. Data has now become the new cash, because if you want to make financial decision, you must run it on data. No data, no decision. Today, data is not just numbers and spreadsheets that accountants and tax practitioners have been familiar with for years. Now, you can see that data could become regular structured. They could also become unstructured data. And some of these unstructured data, you cannot predict them, but you have to analyze them through other means. Data analytics software can allow real-time status monitoring of financial matters, including their tax implication. So you see, data analytics technology is also important. We have the social media technology. Social media platforms have been with us for a while, and they have become useful in the hands of tax practitioners, tax administrators. Social media platforms have been used to disseminate tax information, teach, educate people about the tax. And it is reaching wide appeal to the younger people who like to use TikTok, Facebook, other things that is being hosted on the social media. And so because they are using this, they come in contact with this information and they are informed. A lot of tax practitioners have made themselves more visible. You know, sometimes they're not allowed to do adverts, but because of the other things that they are doing, they've made themselves more visible, providing free trainings, providing free assistance, making them more visible, more attractive to clients. Then we have the mobile app application. So it's not every time you have to use your computer. For example, I know some of the students here are in class using their phones, not their computer. So mobile app technology helps you to, do things with your mobile phone. You want to create an invoice, use the app version. You want to do anything that you can do on desktop, there will be an app version so that you can work while on the go. What are the impacts of new technologies for tax and administration practice? Some of them include customer satisfaction. Now, customers will be satisfied because, one, you are doing a good job. You are becoming very efficient. You are not crying that, oh, the work is too much, because your technology that you have put in place can handle them, not you. And so the customer is satisfied that I can give you a number of jobs and you will get it done right on time. Then there is the lower cost of compliance. Members of staff of the tax authority will be able to focus on more valuable activities because they know that clients, taxpayers are using digital technologies and their errors will be minimized, their cost of compliance will be low, and they know they are going to comply. Then we have data error is minimized. Of course, we know garbage in, garbage out, but when you put the right information on the computer gives you the right thing. And computers have been trained and retrained and retrained, very efficient. And so data error is minimized. Sometimes they tell you the confidence level is 99.99999. So that shows that data error is minimized. Then there's improved voluntary compliance because people trust the system. They want to go and volunteer the compliance on their own. So they are going to, on their own pay their taxes because they know that as you are transacting business, the government can have access and see what you did and they will come after you. So you voluntarily come to comply. That's for the government, the tax practitioners, tax administrators, right? But now for the practicing firm, it saves time because speed and accuracy of the data is ensured. Saves cost in the long run. Yes, it might cost you a little to implement um, this practice, this digital technology, but in the long run, it saves you costs, makes you focus on higher level job that machines cannot handle, and leave the machines to handle lower routine jobs. For example, if a machine can handle a class for me, a teaching class, I will not be here sitting down to teach. So this may be a higher level job. But there are some other jobs that a machine can hire, can be doing for me. For example, machine might be keeping record of the number of times you attend my class. Machine might keep record of how much you have paid and how much you have not paid. The machine can do other things that is necessary for me, but it saves me the time to do all of that. I'm focusing on a higher job. Now, mobility of service. So, like I said, mobility of service, you can use some things in the desktop, use it on the mobile phone, so that you will not be bogged down to carry your laptop everywhere you go. Whereas you have your phone that can do it anywhere you go, so just do it. Then we have increased capacity to serve multiple clients. So you are serving multiple clients and you can pay their VAT on one day, all at once, within 1 hour. You are paid 30 to 50 people's clients taxes. Unlike when there was physical um, services you have to do for them, you can't be telling me that you go to 20 offices or 20 tax ask offices to go and pay their taxes low. So you see, you can serve multiple clients, you can do multiple services for them, and you are going to be satisfied. What are the tax application to technology-based transactions? We see that e-commerce, e-business have become the order of the day. Some of them includes online shopping, we've mentioned them, online movies. We watch movies online, Netflix, Showmax, and even you may not want to. Some people prefer still going to the cinema, right? But sometimes you just sit down with Netflix in your house. We have internet banking. So we mentioned that people will not um, want to go to the banking hall because of the time lag, wasting time and waiting when you can do it at the tip of your fingers to internet banking. I mentioned the use of recharge card. When you want to buy your recharge card, use internet banking to buy your recharge card. Online ticketing and reserve. You want to book for plane, for train, even for some cars, even cinemas. You do your online booking, online reservation, even to reserve a hotel reservation, want to book for a seat, a show, you are using online ticketing. Then there's auction sites where you buy things on auction. There's journal subscription, online betting and gaming. So players such as Google, Apple, Microsoft, Facebook, Jumia, Konga, and so on They are taking advantage of all this, and one wonders whether they are paying the right amounts of taxes to the various jurisdictions where their services are consumed, or whether they will need to charge them where they have presence in such places or not. Income generated from internet technology-based transactions are not exempted from income taxes. Yes. So um, VAT, withholding tax, company income tax, personal income tax generated from technology-based transactions are not exempted. And now some multinationals are preparing their financial statements that will show clearly digital business in a separate line from their physical business. However, due to the problem of no physical presence of most of the digital companies, many countries appear to introduce some special clause to their law called the significant economic presence. So significant economic presence was introduced in Nigeria during the 2021, and it ensures that even though you don't have a physical presence, if you have economic presence that is significant, then your company will be taxed. All right. So look at the impact of technologies on tax. Though we've talked about them before, let's talk about them again. Cloud technology. What is the impact of cloud technology in tax practice? One, tax management software hosted in the cloud will help you to check out cloud service providers. Then you also have storage and retrieval of transaction data in the cloud. Imagine if you don't have your information in the cloud and your laptop, develops faults, or your hard drive fails, cannot recover your data. It happened to me, and that's how all your details will be lost. But when you have this stored in the cloud, all you need to do is go back to the cloud and retrieve them, especially on your phone or a new laptop. So retrieval of data is important. Now access and analyze tax data anytime just by clicking the device anywhere. Present results in dashboards, interactive robust chat dashboard. Then there is also collaboration and exchange of information between tax authority and taxpayers. And of course, we've looked at data analytics. We see that data analytics statistical power is being used to analyze large volume of data to get better insights. It also predicts, identify and predict tax risk factors and anomalies and improve tax advisory services. Also, it checks transactions at source, review 100% check. Sometimes when you want to do audit, you say you do sample, take samples, and you say those samples represent the general population. But with data analytics, you're not going to be taking a samples of about 20% or 30%. You are checking 100% the transactions to see their implications. So you're not doing sample testing. Then predictive analytics assist in risk management. Then there's evaluation of program tax control. Then we see the effect of artificial intelligence and robotics. We saw its use in the character recognition, voice recognition, AI-enabled application or chatbots that can be used to answering subtle tax queries. It offers zero data entry, responding to queries. The machine can be made to learn from tax auditor's conclusion and uses it on future scenarios. It identifies pattern both structured and unstructured data. We have talked about the social media, where it is used to build relationship and can be used by tax practitioners to gain visibility, be recognized and as experts to build their online work to keep their clients informed. They will talk about the mobile app, which makes you to, stay online, stay at your work station, wherever you are, whether in the car or on bed, you can be on your workstation. Then we have the blockchain technology we've just talked about. It helps to record and validate transaction from inception. It also does not need reconciliation, does not need tax audits. What are some reasons why firms leverage on technology? They want to win more clients because technology will help them to get more volumes. Because they get more volumes done, they can win more clients and also retain more clients. Because if you satisfy your customer, you retain them. So because you are using this technology, your errors are reduced and your satisfaction rate is very high and the customers are being retained. Cross-selling services. Technologies provide platforms to enable practicing firms make their sales more visible to many clients. Then there's greater value being added when automation are done and lower level when automated and lower level machines are used to do laborious tasks and allowing the higher human beings to focus attention on some greater value. Just as technology is sweet, it has challenges, which include low computer literacy level. Not everybody can handle the computers, especially most of them that are from the generation X. Some of them cannot handle. Of course, the Gen Y, Gen Z especially, are all, they all like to handle computers. So the literacy among them will not be that much. Then we have the poor internet facility, especially in Nigeria. Internet facility is low. Then there is cyber threat. Then there is high implementation cost. We said before, low operation cost, yes, but high implementation cost. Then we have technical know-how, lack of technical know-how, challenge of data validation. What about some of the opportunities? Opportunities include allowing tax practitioners to focus on higher level jobs while offering services to more clients. Ensures that they are visible to their clients, providing personalized services to clients, enhancing adaptability to change and offer new services, enabling mobility of services, providing new skills to tax practitioners. These are just to mention a few of the opportunities. So far, so good. We have come to the end of this chapter, this topic, taxation of the digital economy. So I will advise you, if you are writing this exam on this particular type of question, just be thinking like people who are used to digital economy. Don't be, just imagine that you are one of the Gen Zs that are, digitally inclined and try to see things from their eyes because they are the people who came into the world where the digital economy is, taking the world by storm. And so just look at things from their angle and you'll be good, you'll be all right in the exams. So thank you so much for coming to class today. This has been a very educative one. We have seen how digital economy has helped us in several ways. Now, not only should you, apply this to your exam, I want you to follow it to real life so that it can help you, look at your businesses and see how you can employ some of these things that you're learning in a class to solving your business problems. So thank you once again for coming to class. And I will say, I will see you in the next class with a different topic will be treated. So from me to you, it's bye-bye.